Hey everyone, good afternoon. Futures Brizio here, 3 p.m. on Monday, November 10th, 2025. Just making a quick update from this morning where we did our quick review. Just wanted to provide a couple of quick updates on what we've seen today. Grain markets have closed for the day, but we did have one or two interesting developments I just wanted to cover here. So let's look at soybean oil first. As I was talking about, we weren't really doing too much here, just kind of ranging. We put in this new low and then just came up here, but really we're failing to get going, over areas like, like this right here, so just kind of stuck inside of this range. But we do notice that today this is the 1 hour chart of December soybean oil. We did break through this swing high, which was kind of the last breakout point. We did have this breakout point, came down, failed to put in new lows down here, and then price started rallying, came down, touched this one more time, and then went. So today we've had pretty much this right here. We've now taken out this swing high right here. So the moving averages are starting to bend a little bit more north, but I said more importantly, just looking at the price action, this could be our turn in soybean oil. We don't quite have seasonality on our side here. So soybean oil, essentially from about early October till mid-November, which is about where we're heading to now, tends to go up. And then there's generally a lull between mid-November and mid-December. And then we pick up again and rally through late February. So we don't really have seasonality per se on our side here. Here's the seasonality chart. So this is where we're at right now. And you can see historically from about, again, around about where we are now in the month of November, down through kind of bottoming out in about the same time in December, prices generally flatten out to go down. Okay, if we look at historical 5, 10, 15-year numbers. And then we start to pick back up again. And then we flip over to this side of the chart. We tend to rally through late February before we get another break, heading basically the whole month of March. And then in April, we pick up and go further. So looking just where we are now, again, we don't have seasonality necessarily in our favor. But as I said this morning, the way I would stack rank the three primary things would be COT, price action, / market structure, and then seasonality. If you can get all three on your side, that's great. Unfortunately, I said we still don't have COT data. And as I also mentioned this morning, it looks like maybe we're heading to a resolution of the government shutdown. Once that happens, we will get COT data updated in the system on all the websites and charts and indicators that use it. But I'm not sure how long that'll take. And I don't expect that we'll see any kind of final decision on government opening until at least tomorrow. And then after that, like I said, even if it's like, yep, okay, let's go, still not sure like when we'll actually see the COT data update. I'm sure there's a lot of priorities and things, so who knows. But we'll keep an eye on it, but we don't have that right now. So just again, from a pure market potential, it looks like, again, that this strong rally we saw back here at the beginning of November may actually have been the trigger for a bigger recovery on price and kind of catch soybean oil up with the rest of the soy market. And, after that, again, we chopped around for a week or so, but it looks like maybe we're starting to break higher again. So we'll keep an eye on that. The other interesting one is hogs. You remember this morning, I had already changed my template, but if you go back this morning, I had this area kind of marked right here to see what happened. And you can see since then we have broken higher. And this again is kind of like a soybean oil type thing, right? It's a pretty aggressive move. Clearly bucks this downtrend above the moving averages, above all the recent structure levels. So this could be our turn on hogs. And again, looking at seasonality, we're right on schedule here if this plays out. Mid-November through mid-February that we generally see a push in hogs to the upside for the next couple of months. So this could be the turn we were looking for on hogs. I don't jump on a moving freight train. I would love to see, some sort of pullback here, whether it's, all the way back to this is a 15-minute chart, either all the way back to this breakout or something in between here, or, maybe even further. I don't know. I'm certainly not taking anything out. Well, the market's closed for the day now anyways, but, so that's hogs. Looks like, maybe we've kind of rounded the corner here and changing direction just based on seasonality, and certainly the price structure is looking more bullish. All right, so those are the main two things I wanted to check out and let you know about. There was no change in anything with crude oil. Soybean meal did continue to make a recovery. Like I said, I didn't trade it just because I just don't like jumping in like that. And soybeans continue to move higher. So, we do have the soy complex kind of coming in line. So hopefully that continues and we can look for some longs. Corn just continues to basically range. Although, again, we did come off of this low down here. We did hold this zone. This was that line I drew in this morning. We did hold that. And so if we can start, getting some higher highs here, then maybe we'll get a turn on corn. But it's still pretty choppy right now, and it's not really showing any super aggressive bullish tendency here. So I'll watch it. I am still overall bullish on this, but I'm not as this isn't as pretty a picture as what we might be seeing on soybean oil. Okay. Rice did nothing today. We just continued a very small, low range corrective move up. So rice is still in a downtrend for now. And Canadian dollar, like I said, I took a short position on my funded account, which is sitting in a small loss right now, about $20. And again, it could turn out, like I said, that we were too early on this. If we go back to the MetaTrader chart, again, we're sitting right at the 100-period moving average, which is also about the 50% fib retracement. And I generally don't like these fib retracement levels sitting right at the 50 on a chart like this. I'd rather see them break a little bit higher. But I took it because I figured it was a low risk trade. Again, my stop is just above this swing high. So if this does continue to climb higher, I probably will exit and just take the small loss. In fact, I might just take it anyways. I mean, the more I look at this, just from a standpoint of, let me take the fib off of here. It just makes the chart real noisy. Just from the standpoint of this look, it's just, you'd like to see that first bearish candle that forms, especially on a higher time frame like this. You'd like to see that first bear candle to, follow through and have no wick at the top and be really bullish. Bearish down. Kind of like what we saw right here. Like this is a perfect bear candle right here to show a reversal back to the downside. We didn't get it. We did have a bear candle, but it was very low range. It was a doji, and it just, really didn't do anything. So I wouldn't be surprised if we continue up here. As long as we hold this area, we're still bearish. I mean, eventually if we go up here and take this area out, then that would change our directional bias. Again, we don't have COT data. There's not really a seasonality component, not that I follow with currencies. So it really, for this, it's COT data and price action, which we don't have the COT data. Excuse me. So we may just have to, just wait on this one and see what happens. We did bounce off here. Again, the reason why I took the trade was off the short time frame, the 15 we failed to make a new high, broke structure right here, and then came down. But we held the moving average, and now it looks like, it's trying to basically pull back and maybe make another run to the upside, which again is why sometimes I really don't like following the super short time frames. It's just too much noise. And so, we'll have to see. The 1 hour chart, everything's trading above the moving averages. And yeah, so we'll see what happens. But I wouldn't be at all surprised if we see more upside in this asset, and then we'll just have to see if that just ends up being a deeper pullback towards like a 61.8, 78.6 retracement level, or whether we're just going to keep going and going here and eventually turn and change direction. There's no sign of that right now. You go out to these higher time frames, there's no sign of that, but it is possible, like this one right here, where we see a much more substantial pullback, even back to 100%, although this one didn't make a new low, so you can't really consider this a real good swing. So like I said, still bearish on this, but there might be some more upside potential before we finally see that resumption of the downtrend, as long as we stay below this swing right here. All right. But like I said, mostly just want to update you on soybean oil and hogs, potential change in direction and breakouts potentially happening here. And especially hogs, like I said, would be right in line with the seasonals. Be nice again if we had COT, but hopefully we'll get that back maybe this week, later this week, maybe. And in which case we can kind of tie all that together. All right. So I'll leave it there, guys. Make sure you smash that like button, subscribe to the channel. Questions or comments, leave them down below. And that'll probably be it for the day. We'll be back tomorrow. Have a good rest of the day.